Mega deals are up 319%, Maya. The big checkbooks are officially out of hibernation.
Or it is just panic buying. Blackstone dropping $1.8 billion on a cricket franchise looks like pure vanity to me.
Sports are a premium asset class. You just hate fun.
I prefer petty drama, like UWMC issuing a literal press release just to cry about Two Harbors rejecting their merger bid.
Pure sour grapes. Should we read the actual statement? The rundown. Blackstone dropping $1.8 billion on a cricket team was not on my 2026 bingo card.
The Royal Challengers Bengaluru. Say it with me, Nate.
Look, I just know it's a massive sports play. Mega deals are officially back. Transactions over $1 billion are up 319% year over year. Private equity has way too much dry powder, and now they're buying cricket franchises.
It makes complete sense if you look at the media rights. But speaking of $1 billion plus, Henkel is scooping up Olaplex for $1.4 billion.
Finally, Henkel gets a premium haircare brand at a massive discount to its IPO price. Good banker work right there.
I completely disagree. Have you read the recent consumer complaints? The brand equity is severely damaged. Henkel is catching a falling knife, not buying a discount.
They're a massive global conglomerate. They can absorb the hits and fix the distribution. It's a classic turnaround play.
We'll see if the math actually works out in the footnotes. Meanwhile, Abertis is buying out the remaining 48.8% stake in France's A63 toll road for roughly £633 million.
Classic infrastructure roll-up, boring, predictable cash flow. The big one, 319%. That's the year-over-year jump in billion-dollar transactions for early 2026. The mega deal is fully off life support.
I saw that stat. And while everyone is looking at tech and the AI arms race, the wealth managers are out here quietly rolling up the map.
Exactly, which brings us to creative planning making a massive transatlantic land grab. They're buying MASECO Private Wealth.
Right out of London. It's a fascinating target. MASECO brings over $5 billion in assets under management, and they only have 123 employees. That ratio is wild when you actually look at it. Over $40 million in AUM per employee.
That's what makes it a brilliant play. Creative planning isn't just buying AUM, they're buying a turnkey bridge into the UK market for high net worth expats. Think about the narrative here. You have American executives moving to London or vice versa, and they need someone who speaks fluent IRS and...
Okay, wait. I'm going to push back on the word turnkey. There's absolutely nothing turnkey about merging a US wealth management behemoth with a UK advisory firm. The compliance structures alone are completely alien to each other.
But MASECO literally specializes in US-centric wealth management for expats. That's their whole pitch.
Sure, on the client side, but on the back end? Integrating their reporting systems with creative planning's tech stack is going to be a multi-year headache. I read through some of the preliminary notes. The regulatory friction here is huge. You don't just snap your fingers and sync up SEC and FCA compliance.
Spoken like a true journalist looking for a broken server. I'm looking at the strategy. Creative planning is telling the market they're a global player now. They want that ultra-wealthy cross-border money.
I'm not saying the strategy is wrong. I'm just saying the integration costs are going to eat into whatever premium they think they're getting.
Fair. But if you want to play in the big leagues, you have to pay the toll. And frankly, I love seeing wealth managers get aggressive. It's usually such a sleepy sector.
Sleepy until someone botches a tax filing for a billionaire. We're going to see the initial regulatory filings for this deal tomorrow, so I'll be combing through those to see how they actually plan to structure the subsidiary.
Please do. I need you to translate the legalese for me anyway.
Always. But if you want to talk about aggressive and totally unsleepy sectors, we needed to talk about what's happening in the mortgage space right now.
Oh, you mean the absolute high school cafeteria drama between Cross Country, Two Harbors, and UWMC?
Exactly. Because UWMC is putting out public statements that basically read like a bitter ex crashing a wedding. Voices.
So the analysts are officially declaring the drought is over? I just read a note this morning saying mega deals are back, with transactions over $1 billion surging 319% year over year in early 2026.
I saw that same note, and honestly, I hate that stat.
Wait, you hate 319%? That is massive volume.
It is just math, Nate. When the denominator is basically zero from the dead zone of early 2025, any pulse looks like a surge. 3 big deals close, and suddenly we have a 300% spike. It is a distorted narrative.
Oh, come on, look at the tape this week. Blackstone just dropped $1.8 billion on the Royal Challengers Bengaluru cricket franchise.
A private equity giant buying an Indian Premier League cricket team. Not exactly your traditional corporate synergy play.
Maybe not, but it proves the big checkbooks are wide open again. And then you have Henkel scooping up Olaplex for $1.4 billion. That is $2 billion plus deals right there. The cash is flowing.
I will give you Olaplex. Henkel clearly wants to dominate high-end haircare. But the other quote making the rounds is this whole AI arms race narrative. Analysts claim it is forcing strategic M&A across literally every industry.
Which is completely true. Every board is terrified of being left behind.
Sure, but look at what actually gets bought. Accesso Technology is buying Dexabit to bring AI to theme parks and visitor attractions. It is not an arms race, it is just companies buying feature sets they are too lazy to build.
Lazy or efficient? Why build an AI platform for roller coaster wait times when you can just buy the team that already cracked the code?
Because paying a massive premium for an algorithm you could license is classic empire building.
Spoken like a true skeptic. But speaking of empire building, the real entertainment right now is watching spurned suitors throw public tantrums.
Oh, you are talking about the mortgage sector mess.
Exactly. UWMC is putting out press releases like a jealous ex. We really need to unpack this Two Harbors drama. Spill the tea. I'm framing this press release and putting it on my wall. You don't see this level of corporate bitterness every day.
The UWMC statement. It's so unbelievably petty. Two Harbors and Cross Country announce a perfectly normal definitive merger, and UWMC literally issues a public statement just to say, hey, we wanted to buy them first and our offer was better.
It's the M&A equivalent of crashing your ex's wedding to announce you had better dates. I love it. The bankers over at UWMC must be furious.
See, I hate this. It screams undisciplined management. If your bid gets rejected, you move on. You don't draft a whiny press release to try and sabotage the current deal. It just makes you look desperate.
Oh, come on, Maya. It's a strategic disruption. You put that out there, maybe you spook the cross-country shareholders. Maybe you force Two Harbors to defend the premium. It's a classic aggressive play.
It's a toddler throwing a tantrum in aisle 4 because they didn't get the cereal they wanted. Show me the actual financial benefit to UWMC shareholders for publishing that. There isn't one.
Fine, but the egos are inflated right now because the big money is flowing again. Look at the data. Mega deals over $1 billion are up 319% year over year. The checkbooks are wide open.
They really are. Blackstone just dropped $1.8 billion on a cricket team.
Wait, really? Blackstone?
Yep. The Royal Challengers Bengaluru, a massive sports play in India. When private equity starts buying cricket franchises for nearly $2 billion, you know the market is running hot.
That's wild. I need to learn the rules of cricket before our next episode.
Good luck with that. While you figure out what a wicket is, I'll be digging into the initial regulatory filings for Creative Planning's Transatlantic grab of MASECO. We should have those numbers by tomorrow morning. Tomorrow's radar.
319%, Maya. That's how much billion-dollar deals are up year over year in early 2026. Mega deals are officially back.
I saw the report, but I'm not calling it a comeback until I see the actual regulatory filings for creative planning tomorrow. Buying MASECO and their $5 billion in AUM is a nice headline, but Transatlantic wealth management is a compliance nightmare.
Oh, come on, it's a brilliant footprint play. They get 123 UK employees ready to go. You're just being your usual skeptical self.
Someone has to read the fine print. Speaking of which, Cambridge Acquisition Corp warrants start trading separately tomorrow.
Yes, the SPACs watchers are salivating. I'm hearing rumors they already have a target lined up.
Wait, really? A target already?
That's the whisper. Probably an AI play given the arms race right now. Everyone's desperate to acquire tech capabilities at scale.
Or they just want the valuation bump. We'll see who actually files the paperwork tomorrow. Keep your eyes on the SEC feed. Catch you next time.